Morning, everyone. Thank you all so much for making it here this morning. I hope you all had a good breakfast and well settled into your seats because the next 1 hour is going to be a rollicking time with Dr. Anantha Nageswaran. Though Ananth doesn't need any introduction, I shall still, for the benefit of some people here who may not know him, I shall just have a brief introduction to him. Anantha is the Chief Economic Advisor of the Government of India. He used to be a professor and an investment banker in Singapore. He used to be the Dean of Kriya University in Chennai. And he has authored 4 books, 2 on derivatives. I think that should push up the antenna for all of us. So somebody who's written books on derivatives is unique. And he's also been in corporate jobs. From 1994 to 2011, he was a currency economist at the Union Bank of Switzerland in Singapore. And he was the head of research and investment consulting in Credit Suisse, private banking in Asia, and head of research and global chief investment officer at Julius Baer. So he has also been an independent director in some local companies here, notably TVS Supply Chain Solutions, Sundaram Fasteners, TVS Tires, and Delphi TVS. So he's a graduate of IIM Ahmedabad, and he got his doctorate in University of Massachusetts at Amherst.
Thank you.
He's an old friend of Businessline. He used to be writing for us. He was a columnist in the late 90s, early 2000s, before he switched allegiance to Mint, and he now writes there. But of course, I know how to get him to write in Businessline a provocative editorial, and the next day I'll get an article from him. So that's Ananth for you. I'll start with a question.
Thank you for those kind words.
I'll start with a question, Ananth, on what the Prime Minister's ambition is of a Viksit Bharat, a developed economy, $30 trillion by 2047. Assuming he comes back, that's going to be prime item on his agenda. Now, I would like to understand from you, to set the ball rolling for the next 1 hour, this is a question which I would like to understand from you. What are the possibilities of attaining this target? Is it realistic? And what does it take, what will it take for India and the corporate sector and policymakers, politicians, all of them to achieve this target?
So your question is it realistic? The answer is yes. Is it achievable? The answer is yes. Is it easy? The answer is not. It is, obviously, it's going to take a lot of effort. Not only from a domestic policy perspective, from the union government, but also state and local governments. But more importantly, I think the global backdrop for the next 25, 30 years isn't going to be as easy as it was, let's say, between 1980 and 2020 or thereabouts, or 2010, when China made this kind of a huge transformation. The global backdrop was very favorable and conducive, not only in terms of globalization and opening up of markets, and also the narrative on climate change wasn't as intense as it is today. So those are important considerations. But if you try to put some arithmetic ranges, you realize that it is not that difficult, because this 30 trillion number does take into consideration that growth will eventually slow down as the base becomes larger. So it's not that we are expecting that you would sustain the same growth rate regardless of what happens to the base. That is unrealistic. But so, for example, as of yesterday, when the financial year ended, we are probably looking at $3.7 trillion GDP size for FY 23-24. And then it is possible for us to grow in dollar terms at about 10%, 9 to 10% for the next 7 to 8 years. That will take you to close to $7 trillion in about 7 years. So by end of FY31, somewhere between 30 and 31. So, and then the question is whether then the size, while it obviously makes the base effect a bit more challenging, it also gives you more heft and your contribution to global GDP increases and trade will begin to happen. So there are ways in which the base effect will be in your favor as well. But I think the important thing to realize is that the kind of reforms we need for it to happen include basically factor market reforms, because the initial 20, 30 years we are focused on product markets, capital markets, external sector, etc. But the key ones are factor market reforms, which actually involve, because they are in the concurrent list, it involves both state governments and union government for it